Wall Street investors are braced for another turbulent session on Tuesday. However, there are a lot of factors which could reverse the ongoing trend and change market sentiment today. In line with our expectations, the US stock market opened a new trading week on a pessimistic note. The benchmark stock indexes slipped on a Monday following a rapid rally developed last week. Wall Street indexes closed the highly volatile session on Monday in the red. The Dow Jones fell 0.63%, the Nasdaq sank 1.12%, the S&P 500 was 0.89% down to close at 3,597 points. The major stock indexes perked up in the New York pre-market, all of them revised upward amid fragile optimism. Nevertheless, there are plenty of factors to cement optimism or dispel it. The S&P is expected to trade in the intraday corridor between 3,970 and 4,110 points. On a Monday, investors digested the grim forecast by the International Monetary Fund and the hawkish remarks by Christopher Waller. Among the sectors included in the S&P, the real estate sector dropped by 2.7%, the consumer goods sector shed 1.7%, and the banking sector slipped by 1.5%. Besides, Amazon shares tumbled by 2.3% after the New York Times reported that the company plans to fire about 10,000 employees, with their corporate and technological jobs starting this week. In the late session on Monday, Wall Street revived a fragile hope that the US Fed might soften its stance. Fed Vice Chair Lael Brainard said that the central bank might be poised to moderate the pace of a rate hike soon. Stock investors cheered her comments, which in turn pushed the stock indexes on Tuesday. All in all, investors are sensitive to the fact that not all Fed's policymakers are on the same page. As a result, the lack of consensus entails high volatility on Wall Street, and today investors are alert to the data on the US factory inflation. The US PPI rose by 0.2% on months in October at the same pace as in September. The red-hot figure is below the expected 0.4% increase. The annual pace of the factory inflation surged by 8% to the lowest degree since July 2021. Obviously, such data could encourage growth on Wall Street on Tuesday. This is not the only high-impact event which could cement optimism. Investors could find some relief as the US and China are making efforts to ease diplomatic tensions. The state leaders are willing to come to the common denominator at the G20 summit. Moreover, lockdown relaxing by Beijing will give a hope for the revival in manufacturing activity and international trade. Stock investors are alert to the corporate reports by retailers Walmart and Home Depot later today. Investors are keeping close tabs on the corporate earnings as the performance of retailers reflects real consumer sentiment in the United States. Hence, robust earnings and the forecast could give fresh impetus to the stocks. The US currency has come under pressure again. Its index is drifting lower, having shed 0.7% intraday. The index was trading at about 106.10, but following the US PPI report, its decline worsened. The US dollar index is likely to trade in the intraday corridor between 104.90 and 106.20. The greenback lost steam versus other major currencies on Tuesday and tested the level of 105.60 for the first time in 3 months due to the prospects of the Fed's moderation in the pace of monetary tightening. Investors made this conclusion after comments by Fed Vice Chair Lael Brainard. Governor Christopher Waller, she also signaled that the Fed is ready for lower rate hikes. This is bearish for the US dollar. The red-hot PPI worsened investor sentiment on the US dollar. The instrument is sensitive to comments by Fed's policymakers, and today the US dollar index might receive some support from a pattern hacker. The US dollar's weakness benefits its Canadian counterpart. However, falling oil prices subdued the loonie's strength. The USD card pays are trading lower on Tuesday, having shed 0.14%. The currency pays are trading at about 1.3293. The intraday Canada is seen between 1.3240 and 1.3340. A speech by Bank of Canada Governor Tiff Macklem on a Monday reinforced the hope that the regulator is not going to give up its aggressive monetary tightening. Tiff Macklem confirmed that inflation remains at elevated levels, so the central bank should take countermeasures. The Bank of Canada has already raised the key interest rate by 350 basis points since March to 3.75%, which has been the sharpest tightening cycle in the whole history. Meanwhile, the annual pace of inflation in Canada eased to 6.9% from the peak of 8.1%. Still, the rate is way higher than the target level of around 2%. Analysts reckon that the annual CPI could stay flat at 6.9% in October. Apart from the inflation data, the loonie is affected by a considerable decrease in oil prices. The benchmark oil grades plunged by 3.6 and 4.11% on Monday and extended the slide today. The crypto market revived optimism like Wall Street. Digital tokens are trading notably higher intraday, though they are still far away from the recent peaks. Bitcoin has jumped by 3.9%. It was trading at almost 17,000 at the moment of recording this video, but it had not settled above yet. Ethereum, Solana, Ripple and Litecoin also added from a 2 to 6.9%. According to Glassnode, investors withdraw 106,000 bitcoins per month to independent e-wallets. They withdrew tokens at a similar rate in April 2020, November 2020, and June and July of this year. FTX used to be the most popular crypto platform with traded tokens worth $32 billion. And nowadays, it's closely scrutinized by watchdogs such as the US Justice Department, the Securities and Exchange Commission, and the Commodities Futures Trading Commission. Besides, Michael Barr from the US Fed said that the central bank is monitoring any jitters in the financial system amid a slowdown in the domestic economy. Thus, a tougher supervision over the crypto industry is on the horizon. In this context, the bullish outlook for cryptocurrencies is in question, though digital tokens can recoup some losses. If Bitcoin is able to settle above $17,000, the next target will be $17,600. Otherwise, the price will hit for $16,000. InstaForex team wishes you successful trading. After the opening bell, market quotes could be influenced by economic data and Fed speakers. Moreover, the market has to evaluate important corporate reports. Be ready for a highly volatile session ahead, and see you tomorrow.